Hello and welcome to the Bankers Tech Talk video series looking at all things fintech. We've been going now for about 6 years and you can watch all the previous episodes on thebanker.com. I'm Joy Macknight, editor of The Banker, and this week my guest is Adrian Patten, who is chairman and co-founder of Cobalt, which has built a post-trade network on shared ledger. So Adrian, thanks so much for joining me.
Thank you for having me.
So what is driving institutional interest in crypto and digital assets today?
Quite simply, there's a wave of institutional client interest, so high net worth individuals and asset managers who are already trading in this market or would like to, and there's lots of money to be made. So that's driving the banks who have been reticent to enter this market and to decide that they really need to do it. And they're also seeing a lot of people make an awful lot of money out of this. And if you think that Coinbase is probably worth most than most banks out there, then that's a pretty good incentive for people to want to get into the market. Fear of missing out is a great driver.
But what would you say are sort of some of the technology challenges in today's modern currency markets?
Legacy technology, legacy processes, and an inability for big institutions to move away from it. They really struggle with that. A few are able to do it, but most of them really struggle. And technologically and process-wise, it's not that hard to do. We've had some clients who've done it very quickly, but a lot of them suffer from inertia and inability to make the decision, too many people in that process, so it just doesn't happen.
And then so how is Cobalt really re-engineering FX and digital assets from the ground up?
The first thing we do, we start with the data from the point of execution, because that's where all of the problems start in the market. Everyone has a different data set of the same transaction. And that's why you get trade breaks, because the trade can't get reconciled automatically and you require manual intervention. And that's why some big institutions will have up to 1,000 people manually repairing trade breaks just in foreign exchange. And it's not just a cost, it's a risk problem. Because if you're not reconciling, then you don't know your true position, which as a former trader, one of the first rules is know your position. And that's where the problem is. So that's where we start solving the problem. We create a single version of a trade with legal entity identifiers for all of the parts of the institution within that transaction and common currency symbols and common financials. One of the biggest problems is for the same transaction, people will have different rates because one risk management system goes to 5 decimal places and another goes to 8 decimal places. So that's where the problem starts.
Okay, and can you explain a little bit about the concept of the shared ledger?
The shared ledger is actually quite simple. It's that shared record, a single data set. We're all looking at the same record. I sort of liken it to double entry accounting. You have a debit and a credit on your ledger, so that if we're all looking at the same set, we can't then have a difference. And that's hugely important when you get to doing lots of trades with each other, because if we have a single version and then we do 100 trades in the same currency pair, it's really simple then to settle a net transaction. So rather than having to settle all of them or try and reconcile 100 trades, just in real time, we can go to net settlement and do that in seconds.
So my last question is really around the fact that you announced earlier, recently, sort of a flurry of partnerships. One is Metaco, the other is the Baton Systems, other is EPAM Systems. So what will these partnerships really deliver?
These partnerships help us deliver a front-to-back solution. More in crypto at the moment, but the Baton partnership is about enabling customers to settle foreign exchange. Whereas in crypto, we do the settlement for the digital asset And EPAM gives us an excellent front office capability with pricing and order routing and pre-trade credit check, giving us the custody solution. And in a new asset class, if new participants are coming in, if we were just supplying the settlement solution, they still need to go and find the pricing and the custody provider. So we've partnered with the best of breed to offer a full front to back solution to make it easier, even though I think some of them will find the product approval process more complicated than the actual technology, because really the technology we don't find that difficult.
Well, thank you so much for your insights, Adrian.
It's a pleasure. Thank you.